Right, everybody. Let's review some markets and see what went on. And starting off with the ES and then Q. So start off with the ES and so there were two trades. We'll analyze both. The first turn was, it's not rocket science. You have demand here and here, but this one is very apparent. This one, not so much. Right? This was the base that was developed. Then you had this earlier on in the day, when everyone's sleeping. You had the lows taken out right here, right? So on a higher time frame, this looks like a spring. Then you had this rejection of these lows, pull back to this yellow line, which is what I'm looking for, and then it goes up. So let's just analyze how it looks on its tape reading chart. Where is this? See the base, this right here with big green, this is telling. Why? Because it's a lot of demand pressure right here. This actually I consider as a signal, because it's not normal to have big green and big red. But you can see the volume is the biggest in 40 bars. 40 bars. You have heavy volume, heavy volume, heavy volume, and it pulls back to test. And this is where you have some effort, which is indicated by the PNF-ER indicator right here. You have some effort, and that thing is not going to go down. And it reverses up, absorbs up, and goes. So initially, if you're looking at this, first things first, this right here, this is not normal. Maybe you could say because it's in the start of the day, right at the start of the day. So maybe back off of it because of that. At the start of the day, you always have high volume, right? But this is where I expected to occur. And then pulls back. This the effort reward is 3.5 times normal. That's how much effort is in here. So it's not going down. And then it goes up here. Heavy selling brings it back down. Goes up, up, up. And this is what I want to discuss. Because if you understand the Wyckoff price cycles, you have accumulation and then markup and then distribution markdown. But you need clear evidence of accumulation or distribution. So obviously accumulation evidence is going to be heavy, heavy volume. And then price goes up because it's entering markup. And then distribution is heavy, heavy volume followed by price going down, which is markdown. So if you look at this chart alone, you're not going to see it. You're just not going to see it. If you look at the bar chart, candle chart, you're not going to see it. So I want to see the red prints, yes, but the red print doesn't mean much unless there's a big price move after it in one way or the other. That tells you that this distribution, because it made markdown. So distribution made markdown. So now it's time to get in short. Right? Just like the red means it's very heavy. So for example, when you reach the top of the rally, this heavy selling because profit taking, that causes price to pull back. So it goes up, and this time it has a big red. This, just to put it in context, this bar has the biggest volume and 240 red bars. This print is at least as bigger than the last 50 prints. There's 20,000 contracts right here. 20 is greater than 4, and 8, and 6, and 8, and 11, and 10, and you know. So this is marking down, right? So in this case, you had about 4,000 contracts, and it lifted, biggest volume in 40 bars, and 4,000, 8,000, 5,000 purchased, and bring it back down a little. Retest the buying where the buying accumulation came, crack, go, try to break it down again, cannot do it. 4,000 contracts sold, and 8,000 contracts sold, price is holding because they're buyers that want to buy this. And then it lifts, buying another 5,000, buying another 5,000, goes here. It pulls back some because 19,000 contracts were sold, I think, right here. And then finally, 20,000 contracts were sold. The difference between this and this is big red and the key technical position that it's in, right? What key technical position? The position of this upthrust. It's an upthrust position. See that? The high was 69.63. This went to 69.64. Price goes to 69.64, and then you have this kind of selling. Do you think it's going to go higher? Or are they selling the highs? Obviously, they're selling the highs. So, that's why the market pulls back and eventually get this dip. Right? So you put it all together, and you see it clearly. Now I'll take a look at the NQ. NQ, you know, first is this demand. Where is NQ? So first I show you the demand. I don't know, this was it. There's just order box, auto combine. Now I think we'll see it clearer now. I'll forget that. I just look at this big big move here, pulls back to the yellow line, tap, and then you have demand come in. So I mean, I don't really have to think too much because demand is demand, right? It's coming from a key level. Now buy pullback to the blue or the yellow line, which is high volume activity lines. So it goes, comes back. I'm really looking for this demand, and we have it. Biggest volume 26, pulls back. Yes, there's heavy selling on the pullback, but I'm looking for long. So I want to see if it holds. It holds, and you have this green bar reversal by the pullback. Take it up. And then right here is where you have the selling. All right. So again, it's not rocket science. I'm looking, you know, you need to see levels, and you want to see demand or supply off those levels. Literally, that's the majority of it. You just have a level, and then you need to see heavy buying or selling. Level plus signal. Level plus signal. There's a level in that area, that zone. There's a signal. Why is it a signal? Biggest in 29 and biggest in 19. Biggest in 29 up waves and biggest volume, up volume, 29 up waves. This thing has the biggest up wave in 29 up waves and biggest volume in 19 up waves. So when it pulls back, again, it's getting restarted right here at the open, where you have demand come back in. So how do you know? Because it will never be 100% bullish or 100% bearish. So how do you know to tilt towards more of the bullish or the bearish side? This is an issue people have. The answer is very simple. It's the higher time frame trend and higher time frame levels. If it's a higher time frame trend and higher time frame levels, we only look for longs. And the mind should be more biased towards the longs because of the higher time frame trend and higher time frame level. So it filters out the more of the selling data or selling signals, because you know that the higher time frame keep going up, 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 up. And if you try to balance both judgments, buying and selling, bullish and bearish, it will only lead to confusion, because you cannot focus on competing or totally opposite indications without confusing yourself. So higher time frame trend is up and higher time frame level. So now look for bullish only, bullish signals. This is bullish and this is bullish. So I'm focused on bullish. And we go up. If the higher time frame was dipping, rotating on the downside, then I only want to see sells. I'm aligning myself with the higher time frame rotation because they keep buying any pullbacks until they don't, at which time you'll have the turn, right? Anyway, let's take a look at something else. So take a look at copper, I guess euro. Go to copper. Copper, this is really not very evident, but there was demand and it picked it up right here. It's actually right here that there was demand. This is demand too, right? So what happens is price goes to a level. Now we look for a signal. Signal should show you clear demand. If you're bullish, it should show you clear demand. Does it show you demand? It shows me demand right here. This is it's not some not all indications will point to it, but I'll give you an example. The demand here, I can see it in terms of demand ratio. This is 1.9 times the average up wave. 1.9, meaning these up waves, right? If I take the average of those up waves, this up wave is almost double the size. So 1.9 times the average up wave and 2.3 times the average up wave volume. You can see the volume pick up here. Now again, if you're a bearish mindset, you're not going to even see this. You'll be focused on the down leg. You'll be focused on the down leg, down leg, down leg, down leg, down leg. Only if you have a bullish frame of mind will you even be able to weigh this as demand. Otherwise, you'll see this and say, oh yeah, I'm going to short right here. But this is the problem 99% make in the beginning, is they try to focus on long and short without letting the bias align with the higher time frame trend and the level. Anyway, so as soon as it's aligned with the high time frame trend level, you get the setup right there. Bang, boom, goes up, down around the 50 MA, green bar up, buy the pullback. There you go. All right. Now let's take a look at euro. I think euro. All right, what happened to euro? Euro, you just picked it up. It did pick it up here and here. It's not very easy to see. Again, if you look at both sides, if you look at bullish and bearish, you're totally confused and see, oh yeah, big red, big red, big red. But if you realize the damn thing is at, if you realize the higher time frame, which look at this. Does this look bearish to you? Does this look bearish to you right here? Does this look bearish to you, this rally? Obviously not. So first thing is you focus on the higher time frame and then look at levels, and that's it. Trend, higher time frame trend, and high time frame levels. And by trend, I'm looking at the rotation. The rotation is very important. Rotation is very easy to do, right? And the rotation is the immediate trade, meaning for the day trade, it's the higher time frame rotation. Yes, you can combine trend and end rotation and this and that, but rotation is very easy because there's only two, up or down, right? There's only two, up or down. There's no, it's very easy to do mechanically as well. Why? Because zigzag indicator can give you the rotation, and zigzag indicator gives you only two states, which is up or down. So higher time frame rotation. Once it pulls back, bang, right there. After that, pulls back, test, long, and just keep on going. All right. So this was the. This one was too early in the day. I don't think this one worked. But let's just be real, this one did. Okay. So there'll be times when it doesn't work. And, that's fine. The key is it's going to be very small risk. Why? Because the yellow line is around here. So I'll be taking the trade here, out below here. It's like nothing. And re-enter after this. Tap, stop below this, which is only 1 bar of risk. 1 bar of risk. So look at how much reward. Right. Now let's go to nat gas, I think. So nat gas, initially there was some supply here, and it only went down a little bit, and then it got reclaimed, right? So you had some, here you go, nat gas higher time frame. You had a little upthrust here that only dipped a little bit. So you don't really, it's going to be either break even or a small loss, and it's fine. And the second one sold, went right to the yellow line, test, and went down much more. Look at this. It's like one bar of risk, and do the multiple. It's like 1, 2, 3, 4, 5, 6, 7. See that? I'm not saying you'll get the whole thing, but know that there's a yellow line here, and be ready to exit because it's sold. There's your resistance, overhead resistance. Below is the support level. Get the hell out. Get out, take out partial, move stop, whatever, right? Same with this. Sell up, going down, watch the support level. Uh-oh, it's rejecting off of it, get out. Alright, so what else was I doing? Alright, hold on. Alright, so let's just go over the lesson. The first lesson is, identifying accumulation and distribution. What makes this distribution? Well, first and foremost, let's take a step back. Let me just take a step back. First step really is, three time frame combination. Right? I've tried different things, and this is what really is it. All right. So you have a higher time frame, or a medium time frame, and you have a lower time frame. The high time frame rotation. This is a very important thing because it'll keep you mostly on the right side of the market. This is the same thing as saying trading with a trend, but you're just using a very higher time frame rotation. All right, and it can be done very easily with zigzag, up or down, direction equals up or down. So the higher time frame up or down, zigzag is what matters. That's for the immediate move, immediate trend on lower time frames. So higher time frame rotation tells you what direction am I going. Medium time frame is the setup, and it is in the direction of the rotation. All right, setup is in the direction of the rotation. So if it's going up, you can use any setup. Your favorite setup, whatever it is. Wyckoff style traders, if they see the rotation is up, the setup's probably going to be a spring. If it's down, it's going to be an up thrust. And there are others. There's volume profile based setups. They also work very nicely. And finally, lower time frame is for the signal. And by signal, the demand and supply signals I showed are your changes of behavior or just big waves. The signal, it's not a pattern. It is evidence of buying or selling pressure. Let me make that clear. When we're looking for a signal, you're not looking for any, up, down, up, red, green, blue setup or pattern. You're not looking for a pattern. You're looking for buying and selling pressure. That is your signal, not head and shoulder or something like that. What you're looking for is clear buying and selling pressure. Buying and selling pressure that can be quantified with price movement, meaning the size, which is called distance, and volume. Okay, so the high time frame rotation, medium time frame setup, whatever it is, spring, up thrust, volume profile, whatever, that is aligned with the rotation. And then when it's setting up, like when you have a spring or an up thrust or a volume profile or whatever else, there's many, you look for a signal, and that signal should be clear buying and selling pressure. Buying and selling pressure, however it is that you measure it. Some folks will just look at it, some footprint or cumulative delta or whatever, right? So now having said that, let's consider part 3, the lower time frame. Let's say you have the high time frame rotation, medium time frame setup, and it's whatever setup. Now we took a look at the lower time frame, and we see that the lower time frame here, for example, right? We're in a setup. Now we're looking for selling pressure. Do we have selling pressure? Yes, we have selling pressure right there, which is the biggest selling volume in 240 red bars. 240 is not make-believe. This actual indicator here showing the volumes right here is 240, more volume than 240 red bars. 240 bars or 240 red bars. It's a lot of selling, and this print of 20,000 contracts is the biggest print in at least 50 bars, at least. It is the biggest print definitely within the uptrend, and after it, price goes down, indicating, as I have here, supply, SPLY. So after that, obviously you can take a short, right? Look what happens, right? Similarly, let's say your rotation is up, and that's step 1, the higher time frame rotation is up. Step 2, what does the higher time frame rotation mean? It means I'm going to take a long. Step 2, do I have a setup? Yes, I have a setup. On where? On a medium time frame. Step 3, do I have a signal? What is the signal? Buying pressure. Why am I looking for buying pressure? Because the higher time frame rotation is up and I have a long setup on the medium time frame. So on the lower time frame, I'm going to look for buying pressure. Do I have buying pressure? Bingo. This volume is the biggest volume in 40 green bars. Right there, we have big green, big green, big green, big green. Just like here, you got big red at a selling zone, selling setup, and the buying setup on a medium time frame. I go to the lower time frame and I see the demand. I see the hurry up. I see the demand. See? Right there. NQ, it actually was even clearer, even earlier on. I'm bringing up the NQ. This NQ it came earlier. Right there. Right? So that's the process. Higher time frame rotation, medium time frame setup, lower time frame signal, which again is not magical, a pattern. It is clear evidence of buying and selling pressure based off of price and volume activity. That should be quantifiable. Not red bar, green bar, this, that. Quantifiable buying and selling pressure, which clearly tells you, yes, a lot of buying, a lot of selling. Now, the key thing here is that we're aligning everything. You have the higher time frame rotation. Rotation is up, right? So we're only looking for longs when there's a medium time frame setup, right? This tells us to look for longs. Medium time frame setup, right? And then in that setup, lower time frame buying and selling. In this case, it would only be buying pressure. Once you put this together, you have your process. This is putting the process together. Rotation, setup, buying, selling, pressure, right? All aligned. I showed you like 3 or 4 examples from ES, NQ to copper to euro in one day, right? And then once that happens, you need an execution. So execution, I can't cover it all, I'll get too exhausted, but execution is not rocket science, right? You're either buying on the breakout or you're buying on the pullback. That's really it. You're either buying on the way up or you're buying on the way down. I'm looking for buying pressure, right? If I see it, I'm going to buy the pullback. And there's so many ways of buying a pullback. Buying pullback wherever, VWAP, moving average, or some lines or whatever, or indicators. But the idea is it's usually on the way, after you get the pressure, you're going to buy it. How are you going to buy it? Are you going to buy it on the way up or buy it on the way down? For me, I know that it's going to pull back, so I'm looking for the pullback. That's what, see, even this shit right here, you have the demand, pressure. What happens? It pulls back. Where? The yellow line. That yellow line is tracking volumes. So when it comes back down, I'm looking for a green bar, bang, long. Right? Pulls back, and it reverses. That's a pullback. I'm not going to buy it on the way up. After the signal, pull back, reversal, long, long. That's it. This is the underlying support after this rally. So dinging, 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 eventually gets to support. All right, that's all, folks. Have a good day. Bye.